Hi, my name is Benjamin Stahl, and you're watching leebsmarketforecast.com for Thursday, October 18th, 2012. After a brief pause, at least for the U.S. indices, the S&P 500 and the Dow have recovered from their brief losses and are nearing their 5-year highs. And why not? Cheap money is very easy to get through the quantitative easing 3, and the Fed has said that the program will go on indefinitely. Well, the stock market is definitely going to be influenced by earnings over the next few weeks. I want to talk about right now the housing market and its improvement over the past few months. I've mentioned this in the past weeks, but it's also we've gotten more confirmation, specifically today and in the last week. First off, new U.S. homes had their highest start since 2008. According to the Commerce Department, U.S. housing starts rose to 872,000, which is a 15% increase year over year and the highest since July 2008. To give you an idea, during the depth of the lulls, we were only at housing starts of 400,000 and well under 600,000 for over 2 years. The fact that we're over 800,000 and nearing on to a million shows a very full recovery. Now, this is quite lower than the over 2.1 million homes that were starting each month before 2007 in the crash, but those numbers were probably inflated, and we don't expect to get to those numbers anytime soon. There are a few reasons that the housing market has taken off. One of the easiest to understand is the record low interest rates. The 30-year interest rates now stand at 3.39, just above the historic lows of 3.36 that were reached last year. This has led to dramatic increases in refinancing, as well as making first-time purchases for homeowners significantly easier than with higher interest rates. Furthermore, with more people buying homes prices are starting to rebound, and this has a wealth effect. With higher prices in homes, people feel wealthier and they're able to spend money more freely rather than having to worry about how their home is doing, whether the mortgage is going to go underwater. We're going to continue to look at housing over the next few months, as it easily could be a driver to help improve the economy over the next few months, but I'm definitely not prepared to say that we're out of the woods, since there is a large number of homes that are going through foreclosure that still need to be worked out of the system. In today's news, one of the weirdest actions that have occurred in a while was Google's earnings release. Supposedly, R.R. Donnelley released the earnings before they were done, sending Google shares down 10% and having them to stop trading for more than 2 hours while they finished the release and were able to release the earnings correctly. Once out, the earnings weren't that great and the stock stayed down, and it shows that even the best internet companies aren't immune from the same problems like Facebook in terms of internet revenue and really growing into a fully mature cycle. That's all for now, and come back next week for more. Thanks.